Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. If you haven't heard, we have Apple earnings after the close. And I've been trading, I think, since 1998, and I've been trading Apple pretty consistently, and I've created a lot of cash flow. There have been times to have swing longs, times to be out of the way, times to be short, times to be heavy, times to be light. And coming into this report, I'll tell you, I have no idea. It's the first time in a while I'm actually not taking some kind of option strategy. You know, my gut actually tells me that I think it's going to be light. I know I have the 6. I was, kidding around on Twitter about everybody, I know bought a 6 plus, and I don't know any people who went out and bought a 6S. But what does that mean? I'm not in India, I'm not in China, and who knows what's going on with that replacement cycle, et cetera, et cetera. So, what I'm going to do is I'm going to approach this flat, and I'm going to think in my head what I need to hear to buy it after the number comes out, or maybe short it. So right away, the number on the estimates, I have this whole sheet. This is what all the analysts are showing. Okay, that really 48 to me, 48 million iPhones is the number that most are looking at. The question is, what do you do if 48 million comes out? What do you do if 49 or 50, or if below 45? So let's go real quickly to the chart. First of all, the chart overall this year, broke its accelerated trend, which I like to be long when it's going on, right here. And that was during the last earnings report. It also broke, or somewhat broke, it's right in there, the more macro trend. Actually, no, the macro trend, or more intermediate trend, it's still above. So intermediate trend broke here on the earnings. This is when the major channel that everyone was trading also broke, and we kind of rallied back up to it and came off. So at this point, the long-term guys are saying we're in a crucial spot because you have a left shoulder, a potential head, and a potential right shoulder, and that wouldn't be good, for the overall market if basically this big neckline were to break moving forward for technology and Apple. So that's just something to think about. Short term, let's just get right into the nuts and bolts of where we are short term in the chart, not if you're a long-term investor. Okay, basically I just drew a lot of little lines which I probably should get out of the way, but you know what? Deal with them. All right, so the options market is pricing in a 7-point move, about. Usually they're right, meaning that if you said, I don't know which way we're going to go, I'm going to buy, calls and puts, and basically you need a $7 move to make money. So right away, to the upside, that is right here. So basically, if, big if, come back to me, if I hear, 49 or 50 million iPhones sold, I think you could buy Apple probably quickly up to about 117, 118. And if you go back to the chart, it could probably see 121 to 122. So it's right here. So I'm thinking if, it wants to have that kind of iPhone number, 49 or 50, you could be a buyer up to 117 because that'll probably happen fast. And then maybe it reaches 120 to 121 where you could sell it. If, on the other side, you're sitting at your desk and you're trading after hours and you could take that kind of risk, you hear 46 million or 45 million, chances are you could probably short, go back to the chart, you could probably short somewhere into this 112. Remember when we traded this 112 and you had a nice breakout? Short somewhere from here to there for then that 7-point move from 115-ish, down to 108. So here is your big range for Apple. This is what the option guys who think they're very smart are saying. It's either going to go as high as 120 to 121 or as low down to 110 to 108. If you hear 49, 50 million iPhones, I think that's going to be impressive. A lot of people think it's going to miss. You could be a buyer after hours, in my opinion, up to 117 and piece it out there if you can get it. If you hear 46 to 45, chances are you could short it pretty quickly down to 112 and get a little downside follow through to bigger support at 108. And that's if, it's on both sides of that spectrum. If you hear 47.5 or you hear 48.1, chances are, you could fade each side of the move and it's going to do a whole lot of nothing. And then, people will think about and talk about the watches and the iPad, et cetera, et cetera. But I think really people are a little worried about what happened in this cycle with the 6S. And then once all the earnings are out of the way, if you don't want to play it, which is fine because it's very, very hard, the stock will settle down. They'll announce a big buyback, and we'll figure out where it is in the range, and then we'll approach it with the new plan, because it does set up. Remember last week we said above 112 it can get to 117. That was a nice day and a half, 2-3 day trade. It went to 119. Same way, when it broke 122, it collapsed and you could have got short. So lots of ways to skin a cat. But for earnings, I am not sure. On an intermediate active basis, expect maybe a $7 move. And listen to that iPhone number and just take a little caution. It's very hard to trade after hours. Sometimes it's a liquid. It's very erratic. And if you have never done it, watch it first and then maybe try a new time later. And I'm sorry I don't have conviction right now, but I will say if someone put a gun to head and said you have to be short 5,000 Apple or long 5,000 Apple into the print, I think I would be short versus long, and I haven't said that in a while. And don't hold that against me. This comes with a money-back guarantee because I'm just here to help. Scott Redler, T3 Live. My Apple update into earnings. Good luck.